Hello friends, welcome back. Today we'll be looking into what do you mean by SIFs. SIFs are the new SEBI regulated scheme launched in April that was to fill the gap between the mutual fund and the PMS. Like for a minimum investment for a mutual fund is 250 rupees, but for EMS it goes around 50 lakh rupees. So there was nothing in between actually. So that's the reason this new asset class was launched, which has a minimum ticket size of 10 lakh rupees. And if you have less than 10 lakh rupees, you can invest in this SIF fund. So minimum ticket size is 10 lakh rupees. The targeted audience for this is HNIs, institutional investors, sophisticated retail investors with a minimum investment, as I said, 10 lakh rupees. It actually offers a flexible structure like open-ended, closed-ended, and interval-based. Open-ended is whenever you want to get in or whenever you want to get out, you can opt out. Closed-ended is something like it has a particular duration of 3 years, 5 years, 10 years, depending upon the fund. Interval-based is kind of a small interval, maybe could be a 2 weeks, 4 weeks, month, 3 months, depending upon the structure and the bid. This allows advanced strategies including equity, debt, hybrid, sectoral plays, market neutral, and up to 25% unhedged derivatives exposure to invest. What are the benefits for this? So, looking at the kind of options SIF fund provides, it is expected to have a high return potential depending upon the concentrated bets and the derivative play, which is beyond the traditional investment funds. Portfolio diversification. So, if you want to diversify your portfolio, like you want to put in the niche themes like private equity, REITs, NVITs, then you should go for it. Uh, it has a professional oversight, like only AMCs with a robust track record can get the license, should have a 3 plus years of experience with uh, 10k crore asset under management or the equivalent experience to launch a SIF fund. It is a regulated production and it is accessible. Like PMS, since the ticket size for PMS is minimum 50 lakh rupees, this SIF fund is accessible for the mid-range investors, the small investors, which have a capacity of 10 lakh rupees. What are the risks involved in this? So, since it's a highly complex structure, strategies involved like derivative shorting, quant models, requires a advanced market understanding. The volatility and concentration is high, and this can magnify your gains or losses. Manager and model dependency. Success will heavily depend on the skill of fund manager or the model he uses. And in this, errors can be costly because if he bets wrong, then it will be a problem and it will cost you. So everything depends on the experience of manager. Since it's a less liquid asset, the exit time of redemption may take some time, anywhere between 10 to 15 days. Since it's a complex structure and the fund manager has to be continuously engaged, the cost seems to be high for this type of investment. Let's look at what types of SIP strategies can be followed. First is the equity long short, which is shorting and longing of the equity shares or hedge funds or hedged positions. Sorry, market neutral and pair trade, depth long and short credit opportunity, multi-asset allocation like allocating into REITs or in gold or in debt funds depending upon the market. Sectorial or theme plays, that is something like if the fund manager feels a certain sector is going to do good, so he can take the sectorial bets. Quant and systematic models, and final, the specialist exposure, maybe distressed credit, or could be event driven investment, or could it be REITs, INVITs, could be a private equity. Recent platform launches. So multiple mutual fund houses have applied for licenses, and few have launched their platforms. Like Quant has launched it, ITA has launched Edelweiss, Mirai, and many more to come. But Quant will be the first one to launch its funds, that is the QSIF Equity Long Short Fund, which is expected to launch in August. I'll keep you posted on when it is getting launched and what are the uh, steps to invest in this fund. Should you invest in SIF? Is SIF right for you? So I would say, depending upon uh, personal experience, the risk taking capacity and patience level is the key, because it has a high investment of more than 10 lakh rupees and has to maintain it. The person who will be investing should be comfortable in understanding the derivatives and concentrated strategies. The person should be able to tolerate high volatility and liquidity constraints. Like, it's not that you want the money tomorrow and you can get it. It will take certain time to liquidify your positions, and it is expected to be a 15-day redemption period. And then if you're looking at something for active and professional management over passive investing, then SIF is right for you. But patience is the key, because if you can't handle the pressure, then it's not for you. Finally, we are looking at a summary table wherein I've just put in the highlighted points. So investment minimum is 10 lakhs plus, strategy is long short sectoral hybrid derivatives. Risk is higher compared to the liquidity is minimal or low, since it's a kind of new asset class which is coming up. Cost will be higher than mutual fund because of the active fund management that is required. Suitability, it is more suitable for HNIs, institutional investors, savvy retail investors who have a good net worth and should be having more than 10 lakh rupees to invest. And finally, the recent launches, like these are the few fund houses which have launched their platforms and expecting their funds to launch soon. If you have liked this video and feel the information what I have shared is beneficial to you, kindly share that with your friends and family. Thank you for giving the time. Thank you. Have a good day.